I have no idea because it really is all about confidence. I mean, they're going to keep the market propped up because as soon as it implodes, well, they have too much riding on this market at these heights, like all of the retirement plans as well as Wall Street. So, it's really hard to say, but what will topple it is the loss of confidence. I cannot stress that enough. This is a con game, and all cons require confidence. So frankly, they can keep this mess going as long as people think that they know what they're doing. And by they, I mean central bankers, governments, and that's the problem for them right now with the most latest scandals at the IMF, at the World Bank, all over the place, quite honestly. It chips away at that confidence. And once confidence is lost, you are not easily getting it back. So if I look at other stock markets, part of what is also happening in here, because we've been taught that there are no other choices besides, Wall Street's stock market, but there are other choices. These are your choices out of the system. So, but if people don't think they have a choice and they see this inflation, they run to the stock market thinking that it's going to protect them. But in reality, when ultimately it does get reset, and I'm not talking about everything being just hunky-dory, going into this, because it can get worse and worse and worse. As Venezuela was entering its hyperinflation, the stock markets were the best in the world between 2012 and 2018. But then when they lopped off those zeros, then what happened to the stock market? It basically imploded, went down like 99%, made another attempt to rise, but then they just lopped off more zeros. Well, actually, I think, in August. So, what happened to the little rise in the stock market? Boom. So you're not going to be able to protect your wealth in the stock market, even if you think that there's no place else to go. You want to protect your wealth, you want to protect your purchasing power, you got to do physical gold and silver. We're close, but we have not. We're in melt up, and I do think that we have entered the very beginning stages of hyperinflation, but we probably have a little ways to go. And when the government can control everything, then obviously you are going to have limited choices. I think more your choice might be limited in your ability to buy physical gold and silver then. But because both gold and silver have the broadest base of buyer because it has the broadest base of functionality, you will always be able to liquidate it into whatever the current currency is, and then buy whatever it is that you are frankly allowed to buy. So that piece is a little bit challenging, but that's how your gold and your silver could most likely play in, is that you will convert it into whatever that current fiat is for a minute, pay your property taxes, pay off your mortgage, buy whatever it is that you're going to buy. Now, if there is, and I'm sure there will be, a market for physical gold and silver that you don't have to convert, then you'll be able to buy whatever you can there. But, for me personally, I really want to be able to work in the normal marketplace. And that's why I do collectibles, because I just feel like that will have the best probability of me being able to use fully in the normal marketplace, because it's in a different classification as, say, bullion. For one thing, I think that in some ways is a good idea, because at least you're in a physical asset that is in a long-term positive trend. However, you want to look at it, because it's easy if the government, all you can do inside of an IRA with regards to gold is bullion. And so it makes it kind of easy should they choose to do an overt confiscation, which I can't tell you whether they will or they won't. History tells me that that is the most likely outcome. And so that's one thing. Number two, even if they don't, with gold and silver at these bargain basement levels, because of course a rising gold price is an indication of a failing currency, well, when they do the reset, and let's assume for a moment that they do not do a confiscation, though I really think they will, but let's assume that they don't, you are going to pay taxes on that distribution. So for me, the choice that I made, you got to do what you're comfortable with, because a lot of people go and they set it up like this because they know you go, I don't want to pay those taxes, but you will be paying those taxes. The amounts, you know what they're going to be right now. Do you know what they're going to be in the future? Because taxes will be going up. So you're going to see the nominal value of gold and silver going up, and you're going to have a higher tax rate. When would you rather pay those taxes? For me, what I did was I took the distribution and I paid my taxes, and then I have to worry about it. I have a retirement plan, but it's invisible because here it is. So if I'm really strong fiscally, but I enter into a contract with somebody else, well, then I am taking the risk that they are not as strong fiscally as I am. So that's the counterparty. When you're looking at dollars, if you look on the top, it says Federal Reserve notes. A note is a debt instrument. Therefore, it is a contract. And therefore, it is only as good as the Federal Reserve on the other side of the contract. And we can see that, the Federal Reserve is struggling right now, as are, frankly, all global central banks, because we're shifting and we're transitioning. So what I mean by counterparty, it's who's on the other side of that financial contract that would then put me at risk. Whereas with gold, I hold it and I own it outright. And that's why there's no counterparty risk, because I don't have to worry about anybody else paying me back. I have it's mine. And that's why the central bank, or the Bank for International Settlements rather, says this is the only financial instrument with no counterparty risk, because everything else is a contract. And by nature, when you have a contract, there are at least two people or two parties that are engaged in that contract. And there's your counterparty risk.